Welcome to PM Express Business Edition. You've been following conversation this week in the finance and economic space. Well, it has been the National Development Bank. Talking about the fact that it's going to help credit support and to other critical sectors and all those things. But why this bank? Do we really need a National Development Bank now? And how are we going to set this bank up? Who are going to be there? What will be the focus and the direction and all the rest? During recent President Akufo-Addo's visit to European Union, we heard that they secured a facility from the European Union to support this bank, some 170 million euros. Who is going to pay for that? And therefore all feeds into our national debt stock. Well, on PM Express, we're looking at the Development Bank and also our debt stock conversation. But I'm grateful to have the Director of Financial Service Division of the Ministry of Finance, Samson Akligoh, to help us appreciate what will be the workings of this bank and also the debt conversation. All these issues wrapped up on PM Express tonight. We're back after this break. Welcome to PM Express Business Edition as we talk about the National Development Bank. What is this bank? Do we need a National Development Bank now? And how does securing monies from our development partners also play into the national debt stock? Samson Akligoh is Head of Financial Director, Financial Sector Division at the Ministry of Finance, and he's joining me here to let me understand what is going to this bank, whether we need it, what is the cost of putting together this bank, and who take care of this cost? And how do we ensure that doesn't follow the line of National Investment Bank and ADB as well? Samson, thank you so much for joining us on PM Express tonight. How are you doing?
Yeah, thank you, George. Thank you so much. And I'm really grateful for you inviting me and also encouraging me to come. I'm doing well. I think COVID has disrupted the normal trend of things, but it's a tough job, so you can't really sit back.
I know at your end there were people who are working from home and all the rest.
Yeah.
How has it been in a very critical space that you work in, Financial Sector Division, where you can't say that because of COVID you're going to stop things? Things has to go on and on and on. And so how did you manage, things, especially during these times?
Yeah, I think that we abide by the general directive of the ministry. We have to make sure that we reduce the numbers and then also introduce a rotation system. But what you see is that the critical staff tend to work a lot more in the office.
Because in your ministry, some would say that we need the money, so you can hardly say that because of COVID, everybody should go home. At least there will be a skeletal staff that will be there to work on all those things. Yeah. So let's come back to the National Development Bank. And all other things being equal is going to start work. But let's backtrack a little bit. We have commercial banks. We are moving towards a sector where government is being told to kind of get out of this space and allow private sector to manage things. Then we hear a National Development Bank. Why a National Development Bank at this time?
Yeah, thank you. I think I would start by saying that if there is anyone who is philosophical and wants to say that, look, let the market be the player. My background really believes in the market and a free market intervention. But I think I would come back by telling you that, George, the conversation that we have been having as a country over the last 4 years and even before has been encapsulated in the Ghana Beyond agenda. And that philosophical underpinning of what we need to do as a country really demands that we must build critical institutions that get us to that level. And a lot of work has been going on at that level. Especially, you see that a lot of work has gone in from the government spending, supporting critical sectors of the economy. And you've been hearing some of the things that government has been doing. You also know that, especially because of COVID, that has even disrupted the plan. The government has come up with the Ghana Cares initiative. And quite interesting, even though the development bank started, work on the development bank started in 2018, and even before that, but officially 2018, the development bank has become a very important key instrument that underpins our recovery and out of COVID and put the economy on that path. And why do I say that? You and I have been talking, and in fact, when I was a student, in economics, the conversation, the philosophical conversation of been private sector-led growth, sector-led growth. And you know that, the post, after the Nkrumah era, a lot of effort has been put into private sector growth, including now establishing the policy banks like NIB and ADB. But as we sit here, the figures before us, and I'll give you an example, clearly shows that private sector-led growth has eluded us. We can't,
Why has it
pretend
failed?
it. But before I even come there, let me give you the figures, and then I can position the development bank in that space. So maybe one of the most staring figures as which almost every Ghanaian can identify with, will be the figures from SNIT. If you look at SNIT data, we have an average of about 1.2 contributors. When you go into the data, we are being told that about 50% of those people are control and accountant general staff. That means that central government staff. And then you now remember that as a country, some of the most big institutions we have, like Cocoa Board, like Ghana Harbour Authority, there are so many of them. Electricity Company of Ghana. Their salary don't pass to controller. When you add them to it, you see that in terms of formal private sector job creation, who have social security and co, you're talking probably about some 200,000 and even less. The challenge we have as a country is that the ingredients for private sector-led growth have been missing. And we have tried a lot of ways to get that done. The Development Bank is actually a very innovative policy instrument that sought to correct that, learning from the lessons that we've had as a country. And I think that we shouldn't miss the whole conversation of Development Bank and NIB and ADB and also the investor banks. And I would probably take some few minutes and explain why. For example, I have here 2 acts which we have passed as a national policy, just to give the policy dimension. So in 2016, the banks that you have mentioned, NIB and ADB were set up by government through an act of parliament. And they were set up to be retail development banks. What that means is that you can go to an NIB can do direct investment into a business. And they've done some that were successful. And ADB too was set up the same way. Somehow along the line, because of the challenges that they face in operating that model, most of them became universal banks. When you take the act that I have 2 acts, just to make some point. You see that the 2016 act, under which NIB and ADB and a lot of the banks fall, is that the Act 930. The beginning tells you that this act regulates institutions which carry on deposit-taking business and to provide for related matters. And when they say deposit-taking business, what they mean is that these banks have a very clear objective to be what? Commercial banks as we know it. And commercial banks have a role to play. Now, this is what government has done. So by 2020, government realizing the weaknesses in the financial architecture has taken a policy decision to say that there's a missing link in our architecture, and how do we get that missing link corrected? So to do that, the whole process we've gone through a lot of process, and a new layer has been added to our financial ecosystem. And that new layer, which is the Act 1032, you can see the mandate is very clear. And look at what's the difference. You see, the Act is to provide license to promote growth and development in key sectors of the economy. You see, so by legal, I just want to set the tone. So by legal foundation, and to also let you know that a lot of work has gone into providing a deficiency that we have. Then the last thing that I will say based on this before you continue is that if you look at the acts, you realize that we have also learned from the lessons of setting how NIB and ADB were set up and how there was excessive government control and what the resultant effect has been. So this new act means that new development institutions will have to be properly regulated with proper structures. And then you also see that we have made provision for different levels of development banking. And I think it's just important for me to state some of them. The Class 1 license is a development finance license. Means what? A license that gets you to do wholesale development finance. You have Class 2, that gives you the license to do what? Retail development finance. Then you come here, you see that you have a license that allows you to do what? Guarantee development. Guarantee development finance. And the last one is a license that authorizes the combination of any of the two. And if you hear what the minister is saying, he's saying that this development bank is under the category of the one that will do wholesale and the one that will do guarantee. And the minister also announced the reason why ADB and NIB were saved and protected was because the minister also announced that they are going to be specialized institutions. And if the process of doing that continues, they're going to be Class 1 development banks. Do you get it? So the need for the whole architecture of where we are having a development bank, a new development bank, where we are working on strengthening NIB and ADB should be clear to everybody.
I stand to be corrected, because some will say that, okay, because we set up bank ABC to do XYZ, now we realize that they failed, and therefore I'm bringing a new bank. The skeptics and those who have seen what has happened over the years are still not convinced that if we sat down for NIBs, ADB, and even one will talk about what was the function then of Exim Guarantee, and now even the Exim Bank.
Yes.
And now if all these institutions, we had governments there that have allowed these institutions to go astray, and now we are saying that we're going to set up another institution. For the skeptics out there, they are not convinced, and they are worried that, listen, it's another money that will go down the drain.
Yeah, George, I think that, the point I was trying to make to you earlier is that, one, the new development bank is an innovation. It has come to close a gap that doesn't exist. And I also point to you that this development bank is not going to do what even ADB and NIB did in the past.
What's the guarantee?
And
by law, because the same law established ADB and NIB that tried to put all these mechanisms
but George,
to protect them.
Yeah, but no.
What is the guarantee this time that the guarantee, development bank
the guarantee,
wouldn't go that way?
No, the guarantee, no. What I'm saying is that, you see, I'm trying to answer your question.
All right.
And I'm saying that, one, the development bank Ghana is not the same as NIB, ADB. Okay. Do you understand? They are very different. And the way the setup process was also different. One, I just told you that in establishing this development bank, we could have gone to Parliament and passed an act and set it up. Like, for example, how EXIM is set up. But we have gone for a regulatory framework. And by the course of the conversation, I will tell you the additional measures that we are taking to make DBG maybe very different. And I think that I would welcome that conversation where people are asking, what are you doing very differently, which I would talk about. But I think the foundation for me is that it must be clear to everybody that this innovation is very different from the past and it's learning from the past. And that is why I even took my time to explain to you that the policy decisions that went into it are very different. And it took us how many years? It took us about 2018, 19, 20 to 2021. So it's not, we shouldn't miss the two. What we need to have a very intense conversation about is that what are the mechanisms that we are putting in place to make this work? Of course, I would answer you, but at the end of the day, it's a collective decision as a country that we must make sure that, look, we get our institutions to work. So I would explain to you what I think is quite one of the difficult decisions that a government, our government will take with respect to the development bank. I'm sure a lot of people would know that in setting up this bank, we didn't just go for it just ourselves. There was a whole institutional framework. This was done in partnership with the World Bank, with KfW, and even later European Investment Bank. In fact, the process of selection, the board and everything actually has been agreed in a way that is very different. In fact, I think that we have even gone to the stage where KfW and the World Bank will have an observer status on the board. And then even the agreement is that the board must be of an international appeal. And we also have processes, the same process for the management process and everything. All this, we are actually doing this because the team, both, especially the World Bank, have experiences with development banks, and they were very key that working together would eliminate those things. And don't also forget, one of the key things we are also key in doing in this is that we want to learn from one of the best, the world best development bank, KfW. So we work with KfW all along the line. And KfW is even going to give us subordinated debt, and they would even provide a lot of technical support to us at the...
So I just to backtrack a little bit in trying to sum up and as we move on. So for you, the problem was that there was still a gap in terms of long-term funding. And that is why you thought that this National Development Bank is critical at this time.
Yes. Yes, that is, I mean, that one. So first, there's a gap.
Which all these banks have failed to do.
No, they have not failed. You see, that is also, look, all over the world, you see, and I think I will go all over the world.
Yeah.
Investor banks are set up for a purpose. A deposit-taking institution
wouldn't do that.
It's not supposed to do certain things. If they do it, they'll get into trouble.
Exim guarantee?
No, Exim, no, I will come to Exim. Okay. In fact, Exim is, Exim banks are supposed to take our companies, to hold their hand and take them to export markets. Exims are not fundamentally supposed to provide like an ecosystem that would unleash the entrepreneur-like ability in yes. They don't give you, for example, the development bank is going to make sure that we don't only develop long-term credit in the banking system, but we grow our equity investment, which as a country we don't have. In fact, the foundation of a lot of businesses in Ghana has been built in debt. If you build the foundation of your business in debt, you don't have patient money to work with. You have to build the foundation of your businesses with equity. The development bank has a mandate to work with, in fact, a lot of private equity funds, infrastructure funds, and venture capital funds. So even though it's not going to invest directly with the final consumer, he also has a mandate to develop that ecosystem. And that level of intervention to make sure that we develop that ecosystem, the capital market, is very important. And it complements whatever we're also going to do in enabling the investor banks to also extend credit to critical sectors where, because of the nature of the economy, they will not do on a normal time. And when it comes to Exim, I think one of the things that is important for us to explain is that, I talk about Ghana Beyond, I talk about Ghana Care.
Yeah.
The foundation of every economy is how solid your financial architecture is in order to support your growth. So if you're a finance minister and you come to the public purse, there's an enormous amount of pressure on the public purse because everything comes to the center. What you want to do is, how do you deleverage the public purse and enable your institutions to stand on their own and be able to push resources into the private sector? This development bank, one of the key levers is that over time, when set up properly, we'll be able to attract resources. The path at which we are going. If you set up a credible development bank, and maybe 3 years, 4 years, it even have a global rating, domestically, it will be able to mobilize your pension funds, your life insurance money, and even your mutual fund money, and channel it to the financial system. And also it will have access to the over 3 trillion of private international capital. And when you look at the model, the development bank fits into Exim, fits into the venture capital fund, and fits into even the Ghana Infrastructure Investment Fund. So this institution is not coming to compete with this institution, but it's actually providing a safety net for them. And I'll give you a practical example. If a young Ghanaian who has worked in the investment industry today gets up and say, I want to set up maybe a private equity firm that supports manufacturing. Typically in Ghana, it might take you 2 to 4 years. You know, you don't have an ecosystem that supports you to mobilize that money. What you even see is that Ghanaians in the diaspora who have access to institutions outside are the ones who are more successful. Can you imagine a development bank that believes that you have started something, you have a track record, and gives you an anchor funding of, assuming you are looking for 10 million, goes through a proper process and give you an anchor funding of like maybe 2 million. That alone is going to give you a serious impetus to leverage on that 2 million to build your 10 million fund. That kind of capacity to build entrepreneurs, to get the private sector on its own to work is what this conversation is about.
Even though I tried as much to understand you about it being different, all these other institutions that were there that had partial government interest couldn't do that.
No, but you see, when you want to, for example, if you want to take money, you must have a balance sheet. You understand? I mean, in fact, for most of my experience, an institution that is set up like through an act of parliament, if you want to take money, you have to get a government guarantee. You know, yes. If you want to, if a lot of things that you want to do become direct contingent liability to the government. So the whole idea is that, do you get an institution that is strong, that really is a bit independent from you and can do that on your behalf? And I think it's important that we have the conversation. So it is not that SZIM and VCTF and GIF are not like, they are very good. Yeah. They are very good institutions, but the development bank is going to provide a catalytic thing for them to function better.
Let's look at the funding of this institution as in the startup. So do I get from you that it will be all funded by development partners? Or
No.
what is the cost of setting up this bank? And where is the money coming from? From GOG, from development partners, or just run me through?
Yeah, you know, well, what we are doing at the initial stage is that government has committed to fund the institution with an equity capital of 250 million, of which 200 million has been paid.
That is coming in from government?
Yes, that's coming in from government. That's the equity capital. That the minimum capital requirement from Bank of Ghana is, I think, indicatively is about $1 billion. Yeah. So at least what we have now enables us to get a license and start operating. Now there are other forms of capital. For example, KFW is going to lend directly to the bank when it starts. I think that may qualify as tier 2 capital. Yes, and then of course when the it is not closed, but I think we'll be talking about 50 million, maybe 45 to 50 million euros. Okay. Yes, but when the board and everything comes, a mandate to be given to them to quickly work on it, because from even this beginning, this is quite a big capital base. Then the government also want the development bank to start work immediately. The facility from the European Investment Bank, not the European Union, the European Investment Bank,
thank you for
and the World Bank are intended to support that. So those are not, in fact, in practice, those are not even money that are going to land on the development. Those are monies that the development bank would tap and push into the economy.
So the
in addition
European
to
Investment Bank is bringing in 170,
yeah, 170 million US.
The World Bank, $400 million.
The total package for the World Bank is 250 million, but some of it was used to prepare the bank, you know, because a lot of things went into preparing the bank. Yeah.
So we're looking at roughly over $300 million. These are not from development partners. Let's say that.
I think that the minister, I think, is about roughly about $500 million.
And so these are that are going to help in the setting up of this bank.
Yes.
This support that are coming in from the development partners, these are loans, right? This is not grants or free money.
They are not free money. Yeah, but yeah, the EIB one and the World Bank one are loans. In fact, actually, they call them concessional facilities. Yes.
These are not going to be, and educate me a little bit, commercial-based banks or whatever, in terms of being a development bank.
No, it's purely it's going to be.
How is the repayment going to be worked out?
Oh, George, I can tell you the development bank is being modeled to be very financially sustainable. The only thing that makes it a bit moderate is that it has a big balance sheet. It has it has a government support. That is why the EIB, the World Bank money, and because it's a big institution, each credit, if you do the credit metrics for it, it's able to borrow at a lower interest rate. So this is it is not any burden to the government. No.
But and when this thing came up and you followed discussions on social media, a lot of concerns out there was that, okay, so if government had this money, couldn't it have restructured the existing institutions and just turn them around, and rather to spend some extra money in collapsing some banks and then going in for this loan to set up? These are concerns out there. What do you tell those who are there who raise concerns? Listen, we spend X amount of money in cleaning up the banking sector, and now we are going in for a loan to set up another bank.
No, George, I don't know. One, let me address the issue of the loan.
These are concerns.
Yes. The loan, we are not, as I said, we are not getting for loans. See, for example, I think the World Bank facility, as I explained, is a line of credit. This is actually the money that the bank will use to work. Do you understand? And pay and make money, yes, in addition to the bank's capital. So I am a bit like, so it is not like a loan,
That'll be borne by the state?
No, it's, for example, the World Bank and the European Investment Bank is a money that the state has taken and on lend to the development bank. But it's like a net debt position. It's an asset that the state has created, not to consume or to do social infrastructure. So if you look at the economy today, which sector is the most profitable? The banking sector. Yeah. So if you get, and these loans are concessional, they are about 3% in dollar terms. If you bring it to the bank, and from all that we are doing, the most important thing is that this money should be drawn when a project or a product is available. It is very clear that this is actually a net positive position.
So this thing has been structured in a way that the bank itself is going to pay for it.
Yes.
And it's not something that will be borne by me, George, or government because it's a guarantee and there's a problem and all the rest. It will be solely on the books of the development bank to pay for it.
No, so there's KFW money is going straight to the development bank. The World Bank and the European Investment Bank is a concessional facility taken by the government and then on lend to the development bank through a subsidiary agreement. But it is it's like a working facility that is going to be unleashed into the economy for it to pay back. And as I said, the development bank is being designed to be financially sustainable. It's not a social enterprise. So, I mean, the net debt position to government, quite frankly, is going to be it's not negligible. It's like neutral.
I see.
Yeah. It's honestly, it's neutral. I mean, this is I don't know how to explain it. I mean, somewhat. So I don't think. I mean, to be honest with you, as a professional, the nature of these things is actually a debt neutral. It's like you take the money, create an asset. So the development bank is going to pay back those loans. So and again, we are not taking the money and then putting it down. It's like something that you take in tranches. Yeah, it's well structured, George. It's not that a lot of professionals are around this structuring. And of course, when the board and the management takes off, and we have a lot of models of development banks that have been successful, and they've transformed countries. Even some are even closer to us, except that they are multilaterals. But the Development Bank of Singapore.
And you believe that is going to happen in Ghana's case?
George, you see, the truth is that we can't, we know that as a country we have challenges. But you cannot pretend to say that we don't have a choice. We have to build our country. You have to try. Even our neighbors, not too far from us, Nigeria, just set up a modern development bank. So I don't know how, and you see, the word is modern, a new modern development bank. That is not the development bank of old. That is a wholesale bank that works with the financial system, have a diversified portfolio, and make sure that it gives credit to banks that deserve it, give credit to financial institutions that deserve it. There's going to be a qualifying criteria. That is where we are working with KFW. That's where we're working with the World Bank. In fact, there's going to be a technical support from the KFW embedded in the development bank. And so the challenge for me is that, look, you have to get a best board, you have to get a best management, and you have to get a best staff. But really, as a country, we must keep working hard until we get there. You know, that is, and that is the whole idea. So the conversation about the new development bank is a conversation about the future of the country. It's a conversation about the private sector. We need to create jobs. You and I do hear you, talk on the business news every day. You know the problem. The problems you tell me are there. You talk about mortgage. You talk about mortgage and housing, and I've seen you talk passionately about it. You talk about infrastructure. You talk about roads and everything. We all know. As we speak, the central government through the Ministry of Finance built virtually all the roads in this country. Where is our toll roads? Where is our bridges? You know, how do we empower GIB? It is this philosophical thinking that is been shaped. So why do we not support it?
I'll be coming back to look at how this bank will be insulated, the structure, the personnel, and all the rest to ensure that indeed what all of us are looking for will come to realize. And also pick your thought on, this conversation about our debt stock and all that. Because if you follow the news, and there was a connection actually, thinking that this loan coming in from the European Investment Bank, I got it right this time, also feeds into our debt stock and all that. So we'll take a short break and be right back. This is PM Express Business Edition, as we talk about the National Development Bank and whether indeed it will live up to expectation or not. Welcome to PM Express Business Edition, as we talk about the National Development Bank and whether indeed we need it right now or not, and what is also going to be done to insulate the bank from all kinds of interference and all those things. Samson Akligoh is Director of Financial Sector Division at the Ministry of Finance, and he's helping me understand and appreciate what this whole bank is about. Samson, thank you so much as we try to close the chapter on this. But let me just get your thought quickly on this that is also out there. The concern about our rising debt stock. What do you say about people are worried? And even with this facility that came in from the European Investment Bank, I've now got the understanding about how it's going to be treated. But when I look at the debt stock, 291 billion Ghana cedis, Eurobond coming in, risk of debt distress, people are worried out there. And the fact that the World Bank president, even recently in an interview, was kind of advising government that we should slow down and look at how that would impact on future generations. For you, what's your thought on these things?
George, but I think I read your interview with the World Bank, and maybe because I read it very well, and I think what I read is that he's saying that we should lean towards the concessional borrowing instead of the borrowing from the capital market. And I think that so it's not really about like maybe you should not borrow. He's trying to say that look at another alternative. But George, quite frankly, every country has a responsibility to make sure that the economy works, and also to make sure that when you borrow, it enables you to get your economy in a shape that you can repay. I think the debt conversation is a very important one, but it must be put in a context. And I think that what I will do, to address this concerns for this is I'll focus more on the development bank. One, I have explained to you that the European Investment Bank facility and the World Bank facility is actually a debt neutral policy. We're actually creating an asset. And anybody who understands the way this works knows that, this is something that we will leverage on to really get our economy to grow and put us in a better debt sustainability part. The second thing that I would also say is that, look, the development bank, when it works well, the vision that is being have and all the work that is going into it, one of the key philosophical things it will do is that it's going to de-risk the public sector. It's going to shift some of the burden that the public, I explained to you, because if today, a lot of a lot of things rest on public finance. So if you want to talk about debt sustainability, you have to look at the things that is being done so that, we can de-risk some of the things, shift some to the private sector model, and then, of course, if you look at the long-term part, you will get more like a sustainable, maybe a sustainable framework. But I think that, having experienced government for some time now, I think that we see it is sometimes, I do know that a lot of work must be done because as a country we need to move. We must make progress. But sometimes I also think that the professional conversation internally is quite a bit apocalyptic because you don't, I just try to say that, look, we have COVID. If you took, I read a lot of this, like just yesterday I was reading finance and development. Emerging country, COVID, they are even calling it what? A debt pandemic. Yeah. Because so many countries have wrapped up debt on the back of COVID. And when you have a situation where, millions of your people need to be protected, that is a sovereign. You have the issue of the financial sector debt cleanup. That added about 5% of debt to GDP. Quite frankly, that people don't talk about the 4.6 million Ghanaians. And if you add the asset management industry, people don't talk about that 4.6 million Ghanaians. It's not like about 100 people. 4.6 million Ghanaians whose debts, whose money, their lifetime savings, their businesses, their churches, their schools were locked up. The contractionary effect of not doing something could be worse than, the idea that as a sovereign state, you need to, and that is leadership. So I think that for me, I would want us to look at the future and see what are the plans that we need to, yes. So and I think that's really, for me, is the conversation. And I think elevating it to that philosophical conversation is a bit more, it gives us some more room to think differently.
So I get from you that the workings of this bank would help create more assets to let us absorb or deal with the debt stock, because it's also about building up of enough assets to help de-risk the country, right?
So, yes, but practically what I'm saying is that, so you now have a new big institution, well done, good credit rating, able to stand on its own and do private sector transactions independent of government. If it's done well, and you reform the way infrastructure laws in the country, your highways, your bridges, things that are commercially viable, don't have to go to the Ministry of Finance. And sometimes the reason why our debt issues becomes a bit more obvious is because the center does a lot. And I think the appreciation of that is also very important. So these institutions that we are creating over time should be able to help us to absorb some of these things. And then you see that what happens at the center will then be minimized. So it is important that we get some of these institutions in the country so that we can, because, for example, if you look at what happened in a lot of things that we are doing in under Ghana Cares, the ambitious 100 million, with a development bank, you'll be able to use the private sector to mobilize enough resources and have a strategy around it and make it work.
So let's come back to insulating this bank, the National Development Bank, from all kinds of interference, from George Yaffe, from Antimansa somewhere. What has been done? What is being done to ensure that the institution stays strong? 10 years from now, this National Development Bank will still be there. I know for the skeptics out there, they look at Meridian BIO, they look at banks for housing and construction, they look at NIB, ADB, and they are still skeptical about the workings of this bank. What is being done to insulate the bank and ensure that it stays on that path for even 10, 20 years, continue to exist?
I think that if there's anything that keeps me awake, it is this question that you have asked me. But I think that people should not be skeptical. What they should rather do is to bring ideas as to what we should do. But I can tell you, like, practically what we are doing. So the first thing is that even from there, we have agreed as part of the project's preparatory document that all recruitments will be done through an independent process, independent competitive process.
And it's taken up next month. It means that the recruitment is almost through, right?
So we have the board has gone through that process, independently selected and everything. We are also making sure that the rest of the process, again, it's an agreement between, as I said, we are not doing this alone. For the first time, we are bringing other parties across. Another thing that I also indicated is that we are going to have observer status from KFW and the World Bank on the board. And I also indicated that the board is going to have an international appeal. And then we would also make sure that I think as part of the regulatory framework and everything, the selection of the management and everything must be will be very transparent, again, through an independent process. So bringing these parties involved and having the commitment to make sure that we internationalize this institution has become one of the key underpinnings of this bank. And that is why, even from the beginning, I don't even want to forget about the act. The act even says that 50% of the directors must be independent. That is if that is in the law, it also insulates the bank. And I also think that the internal design itself has been also done in the same way. And I hope that learning from the best development banks in the world, their internal policies and everything, which we are doing, should be at least some saving this. But again, at the end of the day, I think that a lot of responsibility will lie on the board and management, and of course, we as citizens, to get this very innovative institution to work.
But the minister said this is going to take off in July.
Yes.
So it means that I stand to be corrected. The officers have been selected. The recruitment process is almost through. Or where are we in terms of the fiscal staff opening these doors to the public?
Yeah,
are we working with the July deadline still?
Yeah, we are working with the July deadline. I think that we are going through, as I said, the normal corporate governance process must work. So we went through the board. We are now working together with to make sure that the board must be involved in finalizing any management process. It's the senior management that will do the recruitment. So that one will happen, when the bank starts.
So the MD might be in place right now, even though you are yet to announce?
Yeah, the process is ongoing by the independent.
And when are we expecting the announcement to be made?
I think that one is not. You wait for the government and the minister to.
So you can apply for that position.
Well, you can. The board position was advertised. For the first, it was advertised. And the senior management position too was advertised. Yes. And I didn't have any. In fact, there was actually a search committee that was even formed among industry, a large section of people to even vet the work of the independent recruitment firm. So it's quite a very competitive process. Yeah.
And you're working with July, it would open up?
Yes, we'll work. Yeah, we are working very hard. I can tell you that day and night, the team and the project team is working so hard to get this to happen.
Something may have to draw the curtain down. Time wasn't that good for. I think we'll do a part 2 of this development back on this.
Thank you.
And also we have to draw the curtain down on our discussion on the National Development Bank, and also scratch the surface on our desk talk with the Director of Financial Sector Division at the Ministry of Finance, educating us. And it looks like we might also bring him back again. Financial sector cleanup. There are still 1 or 2 institutions out there that are struggling with liquidity and all those issues, and what is going to happen to them. My name is George Jaffe. This has been PM Express Business Edition. Have a great day.